Hey there, everybody. Welcome back to another 21st Century Renaissance and another Open Interest Newsletter Breakdown. I'm your host, Dr. Michael LoPiano. Wonderful to see you all once again, as always, coming to you today inside a black box, which has a very interesting echo dynamic in it. Hopefully that's not going to sound terrible on the recording, but we're going to find out. So interesting things last night, a number of things for us to talk about today. The big theme for today, just so you know what's coming, I want to make sure I get this right out there off the bat early, is what I think we are seeing right now is exactly what Reddit user Gherkinit many years ago described as this closing phase of a volatility cycle. So what we are seeing, what we have seen, this sort of curbing of this delivery of FTDs, right? This explosive price movement that we saw take place yesterday, that we saw take place immediately upon close. I think otherwise category 42 has this on the money. I think indeed this is a series of FTDs, perhaps that were generated on January 9th, and that this is a part of that ensuing up move that comes from the closing of all those FTDs heading into the end of this cycle. So back. If you go back, I think January 15th, and then in our live stream on January 17th, we talked about this. Definitely, if you need a refresher on that, we did spend some time breaking down volatility cycles during the live stream on January 17th. We'll probably spend some time on that this weekend as well, because now we're at this phase, right? What we saw back on January 14th was the beginning of a volatility cycle. That's what it looks like. That's what we've seen play out over these past few weeks. And this is the close of them, right? So it's about a 5-week period. This is what it looks like. And so we'll break this down. We'll break down some of the things I'm seeing here, what I think is going to happen, how this is going to play out on the technicals. We can go into deeper detail again during the live stream. But the main point here is this up move. It is my current outlook based on what it looks like we're seeing right now. This up move may last. It could last for just today. It could last just for today's open. Maybe it carries into Monday. But basically, this is going to be something, right? I've been talking about this. Some others have been talking about this. Richard Newton mentioned this way back in January as well. What this really looks like is we're going to have a few days of up. It's going to get a lot of people excited. It's meant to draw in FOMO buying of options. That's perhaps why it even took place at a time when you couldn't buy options, right? So it's going to draw this type of buying activity in, only for it to get crushed down. And we have short liquidity I have not seen it higher in the last year than it is right now, meaning there are more shares available to borrow than there have been at any single point that I have seen in the past year. And I've been tracking this every single day for the past, I guess, more than 9 months now, 9.5 months, something like that. So it's very high. So we're gonna break down some of this, but I just want to make sure I got out there, right in the way. If you go ahead and close the video now, you don't take a look at the rest of this or come back to it. Just know that that's what I'm seeing, and that's what I think this is, and I think that we will enter into another volatility cycle over the next 5 weeks into earnings. So that's my outlook right now. That's what I think we're seeing. Obviously, it doesn't matter what I think; it matters what happens. So this can be played any number of ways, but maybe there's a fake, right? Something like that. I'm not ruling that out, but I would say that the likelier move, the likelier price scenario, given that things have played out basically as we thought they would at a lower resolution way back in January, when we saw especially that January 14th dip actually take place, that this is more or less what that's telling me. Obviously, right, things can come and change that, but I want to make sure I put that out first and foremost before we dive into some of the details today. Let's hop in to our moments of gratitude here. So many thanks to, again, right, today, Super Mega Ultra sponsoring today. Sponsoring today's coffee. Thank you very much. Thank you, as always, to Dat Scruffdo, who has generously pledged to help offset some of my data expenses that I invest in every day to make sure that I have access to all the data sources I need to bring you guys this content. So thank you very much. And we have a new monthly gift giver here. So Ken Wedmoreland, thank you very much. And thank you, of course, to everyone who has been so generous thus far to helping me in my mission here, right? Nothing I have is monetized. Everyone who has given 100% out of their own free will and generosity. So I'm really very thankful to all of you for supporting me in this. Especially right as people continue to try to take out my accounts, which has happened again. Luckily, Twitter seems to have a bit better handle on this in terms of policies. But yeah, basically, right when this price action took place yesterday, this explosive up move, somebody tried to hack into my account. It looks, and so it was locked for several hours, but thankfully, Twitter has these fun puzzle games that you have to play to unlock your account. So, obviously not getting too conspiratorial, but this is, again, right, this is probably the 6th or 7th time that something like this has happened to me. The majorities were over on Reddit. This is only the 2nd time this has happened to me on Twitter. Yeah, so again, thank you very much for your support and for your generosity, everybody. You guys give me the inspiration to keep going. So thank you very much. So yeah, all of this, of course, at the same time that, right, and this is just another kind of example. We see this stuff happen. We see, right, whenever we get these big moves in the underlying, whenever we get these crazy volatility moments, what do we get? We get reports from mainstream media. Oh, sources say, there's another one, right? How many times? Oh, sources say, oh, this is about somebody rumoring that GME is going to do something with Bitcoin. Right, this comes out of nowhere, not necessarily nowhere, but right, Ryan Cohen on Sunday, was it Sunday? He posted a picture of himself with like Michael Saylor. Nobody cared when it was Sultan Ahmadid, Al-Madid. But now that it's Michael Saylor, okay, this must be, sources say they're thinking about Bitcoin, and then we go to, Peter Schiff, who hates all things Bitcoin, and then it says, oh yeah, well, GameStop's making an announcement. There's been no announcement. I've seen no announcement of this. The only thing even close to this is I saw Michael Saylor and Ryan Cohen take a picture together. That's 100% everything that I've seen. So this really, what would I say? This stands out to me as a very clear, coordinated mainstream media attempt to basically disguise what is going on here with these liquidity cycles, with these volatility and liquidity cycles. That are going on behind the scenes. Oh yeah. No. It's this thing, right? Don't pay attention to whatever's behind the curtain. Just read your sheet, your CNBC, digest and kind of be done with it here. So current context, obviously looking good, right? SPY after this bounce off of the 50-day moving average, bounced up here. We had a call wall breach. Very interesting to see. Call wall breach. We also set actually an all-time high in the after hours period. So that's not going to log on the daily chart here, but we did set it, touched into the 611. So call wall breach, head up to an all-time high in the pre-market period. So good to keep that in mind. Call wall breaches, right? This is per studies from Spot Gamma, right? Spot Gamma has run this a number of times, back tested this historically. Call wall breaches on the S&P 500 result in 1-day negative returns, but 5-day positive returns. Although they're very minor. They're very modest. So really, what's kind of going on behind the scenes there, so far as I can tell, is we get this big move up, and with these big moves up, especially stuff like this that happens after hours or in the pre-market, if traders have the opportunity to do so, they will try to leap out of their calls, their more short position stuff, which can cause a short-term depression in the price as they sell and close their contracts. We're kind of back up there, yeah. So if we kind of open at the call wall, if we kind of open at 610 or move above that, we might see that type of move take place. We could bull up, right? It's not. This is just kind of a statistical aggregation, but In general, these are definitely the types of conditions that you want to see in order to have a bit more comfort in terms of GameStop trading at elevated prices. That doesn't necessarily mean that it will, but something like that certainly does not hurt us. Yeah, what exactly caused this? Are these somehow related? I'm not sure, right? Like I said, I don't know too much about what's going on with swap theory. What's going on with those swaps? Richard Newton has a really good point, right? He was thinking that basically these first couple weeks of February. Now this is right, kind of end of January, first couple weeks of February. Now this is when back in 2021, right? This is around the time we got to the GameStop hearing, and we got that bounce back to the upside, right? We got a bunch of GME stuff packed into swaps on the 29th of January. So part of the idea is around these key swap roll dates. Basically, what Richard's been talking about is the idea of the necessity to move the price down so that those swaps can be priced appropriately, so that they can be rolled, so that they don't have they can buy another 6 months of time, but the price can kind of be let go necessarily after that. Richard does say he does think we have another couple of swap dates coming up in March. So that would around mid-March, right? So March 11th, I think he says, is the first one. And the 28th of March would be about the Friday. So that'd be the Friday after earnings. So basically, if that's correct, that would also line up with another 5-week volatility cycle if one were to begin. We were to enter into one going into next week. So just to keep that in mind, like the timing does work out for all of that stuff to line up. Not saying that's necessarily going to happen, but that does line up conspicuously well. Key levels today: SPY 610, gamma flip lines a little higher, 608, right? Just because we've moved up a bit. Stuff still looking good heading out in terms of market optimism by kind of into the end of February. Not the case for March, right? Basically, last day of February, last expiry. Not super optimistic, and definitely not heading out into March. Not crazy down the other way, but we do have a lot of put gamma kind of piling up out there. So I think I know this is not a SPY video, this is a GameStop video, so I'm going to keep this brief. But basically, what this is telling me is optimism goes away for the general market after February. So these types of conditions, if GameStop, right, if GameStop is going to enter into another volatility cycle, even if it kind of stays elevated in this range here heading into February OPEX, market conditions not great, kind of as an outlook for what is coming down the horn in March. So again, those types of market conditions would be another thing that would lend themselves to GameStop's price being depressed as we enter into another volatility cycle, if indeed swaps need to be rolled on the 11th or the 28th. Something like that, right? Something along those lines. So, yep, we did in fact get that price scenario that I was looking at yesterday. So stayed above 25.70, moved above 26 during the day, held 26 as an intraday support. All of that I was looking for. Very happy to see that. I was looking at that specifically to say, okay, we have all this gamma, right? We have all this call gamma stacked on top of us. If we kind of hang out around the 26s and we don't really fall below that, we've got a chance for a pretty big gamma ramp, and then maybe a test into Monday of the 28.50, earlier in the week 28.80, but 28.50 kind of area. That's what I was looking for, to see something like that unfold heading into today, heading into Monday. What I did not expect is that the minute after market closed that this would take place, and then we would get that little bit of extra spiciness on top all the way up to 31.66. So we have been hanging out right at that 28.50 level basically the entire time during after hours, during the overnight expo period, and into the pre-market hours here. So got that target right, I guess, right? Just hanging out around that moving average. Could we stay up? Could we continue into Monday? I think that's still a possibility. But basically, what's going to characterize these conditions is higher volatility. And I think once we open today, we're going to see volatility go up quite a bit. I think we're going to see those values potentially in the 90s, maybe upper 80s, because this move didn't occur in the open market. Certainly, if that materialized, if this move up to 3166 materialized, what was I going to say? I should make this bigger for you. If this move materialized intraday, yeah, we definitely see IV values in the 90s there. So maybe in the upper 80s, something like that. We got this weird move overnight, just like kind of it moved down to 67%, which is literally 52-week lows overnight. I have no idea what's going on with that. Have seen that before. Did see something conspicuous like that take place right at the beginning of our November run. So that may be a signal that yes, indeed, that's another strange tell that maybe we are heading into the beginning of the beginning of a new cycle, and this is the phase where we're drawing in buyers, and that if I don't know, maybe this is a fake, maybe it will briefly open very low to kind of draw in buyers before kind of spiking up super high, something like that. I'm not exactly sure what's going on there or why that's displayed as such, but I'm what would I say? I am skeptical of it. Certainly, I would say I'm skeptical of it. I am certainly wary of it. Yeah, otherwise, category 42 made a great point here. This does fall as one of the last days today and Monday fall within this quote unquote boofing window, as he likes to call it, but an end of this strategic fail to deliver window based on the market closure, right? So Jimmy Carter's National Day of Mourning on January 9th. Yeah, as a market closure event. Yep, options super low, so that's why we saw stuff go down, right? And this is, again, I'm going to point this out. You'll see that I point this out. I think this is so important to take into account here. I'll point this out twice in this article today. Overnight, we saw liquidity go up to 3.3 million shares. Okay, that is the highest. That is the highest I've seen in the last year. The tanks are full of shares, right? Like, slowly, they've institutions have been clearing FTDs. Earlier this week, XRT came off reg show. We have so much available liquidity, and this can be used by shorts to crush the price whenever they want it. They can use XRT again as they've done. They can start another cycle and basically crush the price back down for another 5 weeks, essentially. They can do this. So will they necessarily do this immediately today? Maybe this ends up being a one-day thing. Maybe people rush in right at the open, and then there's like 45 minutes of buying, and then it just gets crushed, and then we move down to like 27 or something like that. Maybe it stays up. Maybe it continues to stay up. It trades down a little bit. We kind of do a double top thing on Monday, and then we go back down into our new cycle, something like that, right? So this is what we're looking at, obviously, on our 4-hour. There's our level there. I think, yeah, moving down like this through February OPEX, and then kind of bottoming out, maybe even kind of on top of this line if we're going to maintain this position atop the 200-day moving average, which I've drawn on our 4-hour chart here. Yeah, I don't see why we couldn't just kind of move down here and then maybe trade up a little bit into OPEX and then maybe a bit into earnings, and then maybe it gets crushed into earnings again. Kind of, Richard sketches this out very well. He's got a nice, what is it? Various triangles. So he's got some good stuff there. Go check that out. Yeah. Also, right. Very interestingly, observing the 69-cent share orders, we did get another one last night. This one was for 29.69. 29.69. It was